Okay, so we are in Unit 3 now, and we are halfway down the course, or almost halfway down the course. And for the most part, you guys have been working really hard and doing a really good job. And I'm really proud of the progress that so many of you have made and how hard you've been working. If you started to slack off at the end of Unit 2, here's your chance to start from the beginning and start with a clean slate and work really hard as we move into Unit 3. So a fresh start here. But when I say that, a fresh start, but we really need to remember everything we learned from Unit 1 and from Unit 2 in order to continue with Unit 3. So I encourage you to have good study notes, an organized binder, and reviewing your quizzes and tests from the past to make sure that you have a good understanding of all of those concepts from Unit 1 and 2 as we move into Unit 3. So let's get to it. Let's start Unit 3. So Unit 3 starts off with Chapter 6. And in Chapter 6, we're going to look at something called journalizing. So on your first slide, you've got a number of transactions for Peter Drysdale for his business as a sign painter. And we've got a number of transactions for the month of May. When we look at these transactions, and what I've done here is I've posted them to the ledger for you. So I've taken all of those transactions and posted them to the ledger. So I'm going to make this large, and we're going to look at these transactions for a second. So for instance, if I was going to look at transaction here for $100, what is going on? Oh, I don't know what that was doing. But let me just change my pens tool to a pen to make sure that I'm at pen. So if I'm looking at this a debit of $100, I'm wondering, where is that credit for that? So I look here and I see a credit for $100, and I might look down here, and where is that credit for $100 with regard to that transaction? And immediately I don't quite, oh, here it is. So here it is in accounts receivable. Okay? So then I say, okay, well, where is, I need this, I see a 200 here, and it's a credit for $200. Where's that corresponding credit for $200? Well, there's $200 here, which is a debit, and there's $200 here, which is a debit, but I don't know which one it relates to. So as you can see, when I'm looking at the ledger and I have my transactions all posted to the ledger, I have trouble kind of figuring out. Now, I know that I taught you to put little 1s and 2s beside it, but even then, I've got to kind of hunt for that. It's kind of a Where's Waldo kind of exercise, and that's not very efficient. So we're going to find a better way to do that. So the first thing I'd like you to do, we're going to go back to the slides, and I'm going to now stay on the slides for a little bit. So I'm going to start from the beginning. So on the second slide here, I'm going to say there's some issues with the ledger. What are the issues with the ledger? See if you can identify all 3 of the issues. And I'm not even going to tell you those. I'm going to let you tell me what those are tomorrow. So just by looking at the ledger we were just looking at, what are some of the issues with the ledger in terms of being able to understand what's going on in the accounting process there? Okay. So we're going to introduce you to a step that comes before the ledger. And so that step is called journalizing, or recording items in the journal. So the journal is a book. Okay, so it's a book, just like the ledger is a book. The journal is a book where all the accounting transactions are first recorded. So this is the first place we're going to record the accounting transactions, and we're going to record them in chronological order. What that means is by date. Okay? If you've never heard that term before, it's date order. So we're going to record our transactions in the order in which they occurred before we record them in the ledger. So step 1 of the accounting cycle is that the transaction occurs. Step 2 of the accounting cycle is that the transactions are recorded in the journal by date. And then step 3, which we've already learned, step 3, is that the transactions are then transferred to the ledger or recorded in the ledger. So we're working on step 2 right now, and we already know how to do step 3. So let's look at a ledger. I'm going to turn me off so that I'm not in the way here as we look at the ledger. So, sorry, the journal. So this is a journal, okay? So this is what a journal looks like. This is called journal paper, and this is called the general journal. So I have a couple of columns here. First thing I have is page numbers, and the page number is blank, and you're going to write this number in. It'll tell you which number it is, and the pages are numbered consecutively. So the next page will be 17, the page after that will be 18, and so on. I then have a column here for the date. And I want you to notice a few things about the date. First of all, we record the date. The first thing we record on the date is the year. So we're going to put 2015 as our date. And then we're going to put the month. And then in the second column, we're going to put the day. Now notice, so this transaction happened on November the 9th. The next transaction happens on November the 12th. And the third transaction happens on November the 28th. I don't have to write anything for the month until the month changes. So here, when the month changes to December, I write the December there, and the first transaction happens on the 3rd, and then the second transaction happens on December the 17th, and I don't write the month. I don't write the month anymore. Just bear with me here. I've got a technical glitch here that I fixed with a pen that I just knocked onto the floor. Okay, so that's the first thing. So the first step of journalizing is to record the date. The second step of journalizing is to then record the debit entry. So when you read a transaction, you're going to identify the 2 or more accounts that are affected by the transaction, and you're going to write the debit first. So whatever account is debited, you're going to write the name of the account first, and you're going to write it right along the edge of this column called the particulars column. Okay, so this is the debit, and it goes first. So in this situation here, it looks like they've paid for some supplies. So we're going to debit supplies, and we're going to record the debit in the debit column. And then we're going to indent, and notice this is indented about 5 spaces. And we're going to record the credit part of the transaction. In this case, it's the bank. And we're going to credit the bank $135. Notice that each journal entry balances the debits equal the credits, the same before as we were doing for the ledger. We then, the next step, so we record the debit, which is step number 2. Then we record the credit, which is step number 3. And then step number 4 is you're going to write a short explanation of the transaction. Sorry, I'm not so good with this pen. So here they bought some letterhead and envelopes, and they used check number 40 to pay for it. This is our source document. We're going to learn more about those in the next lesson. Okay, so we're always going to write the source document number in our explanation. We're then going to leave or skip a line, leave a blank line, and then we're going to record the next transaction. In this case here, we have what we call a compound entry. Okay, a compound entry. And a compound entry is when more than 2 accounts are affected. So in this situation here, 3 accounts are affected. And it looks like here, we're going to debit equipment, which means we must have bought equipment. We bought equipment for $12,000. We paid $2,000 out of our bank account, and we owe the rest to the company Worldwide Fiber Optics, $10,000. So debit equipment, credit accounts payable, credit cash. And here again, we've got a short explanation. Computer station installations issued, check 41 with a balance due in 30 days. And then we skip a line and so on. And so we're going to record the transactions in date order. So what I've given you, the other thing too here, notice here, account titles are capitalized, and a simple and brief explanation is included with a reference number wherever possible. And that's to ensure that we can go back and trace that transaction. So notice here we've got an invoice here. So here was a sale was made, accounts receivable was debited, fees earned, indented because we're going to credit that, and that was an invoice number 239. So the steps for recording journalizing is that journalizing is the process of recording accounting entries in the journal. The journal is sometimes also known as the book of original entry because it is the first place that we record our transactions. So the first step is to record the date. The year goes on the first line of each page. The month is the first line of each page. Do not repeat for each entry. Enter the new month when it occurs, which I showed you. And finally, you enter the day, and the day is on the first line in the second column, and the day is repeated for every transaction. Even if the day, let's say there was 2 transactions for December the 3rd, we would write the 3 for the first transaction, and then we would write the 3 again for the second transaction. So here are the steps. Enter the date, and we just covered how you would do that, and you have the example. Then you're going to enter the name of the accounts that are to be debited on the left side of the particulars column and enter the amount in the DR money column. Step number 3 is that you're going to enter the name of the accounts that are to be credited. You're going to indent it about 1.5 centimeters. You don't have to measure that. You just have to indent it the size of your pinky. And then enter the credit money balances. So credit debits first, credit second, and you indent the credit names of each journal transaction. And then step number 4, write a brief explanation of the accounting entry at the left side of the particulars column beneath the last credit item, and reference the source document numbers, okay, for each transaction. Oops. So let's try. Okay, so flip back to the first slide. And we're gonna actually journalize some of these transactions. So I've already written the date 2015 at the top. And then I'm gonna write in May and go to the next column and write May 2nd. And in this situation, they received $100 from G. Anderson on account, which means that we received money from an accounts receivable. So the account that we're going to debit is bank because we've received the money. You can ignore this PR column. We're going to use it later, but ignore it for now. And we're going to write in the debit column $100. We're then going to go down to the next line, and we're going to credit accounts receivable. Accounts receivable, G. Anderson. Make sure you write the name of the person that you are receiving the money from so that you can properly record it in the ledger later. And then we're going to go over to the credit column and record it there. And it doesn't give us a source document number, so we can say client paid back what they owed. And I apologize, my template's not working. That shouldn't be indented. So now I skip a line, and all I do here is I write May 2nd again. And now it says here, paid $100 to Consumer Supply in part payment of the amount owing. So that must be an accounts payable. So we're going to debit accounts payable, Consumers Supply, and we're going to record a debit of $100, and then we're going to reduce our bank, which is a credit, $100, and then we're going to explain paid partial payment of amount owed. Okay? And again, if you had the source document number, you would put that in. Let's do one more. So May 8th, we borrowed $100 from our bank. Okay? So we're going to debit the bank $1,000, and we're going to credit bank loan $1,000. And we're going to say borrowed money from the bank. And I apologize, I'm not sure why my template is doing that, but this can be right over against the left side of the particulars column. Let's do one last one. Received $200 cash from NPAL in full payment. So we're going to debit our bank. Actually, no. I'll leave these ones for you to do. So if you can do the last 5 transactions there and practice journalizing that would be great. So let's go back to our lesson again from the current slide. And we've already talked about all of these things. So the purpose of a journal is to provide a continuous record of the accounting entries in the order in which they occur. And information about a transaction comes from the business in a form called a source document. So in order for the account to summarize the information in the source document, they use a journal that lists transactions in date order or chronological order. It is organized that way to keep track of business transactions. And then the last thing I'll mention to you here is that when we first open our business, we're going to record a journal entry that shows our opening entry, where it has a debit of all of the accounts that we're adding to the account and crediting all of the accounts that need to be credited when we first open the business. And the explanation would be opening financial position. So let's think about some of these things before. Why do you think the journal is called a journal? What do you think the reason for that is? Why do you think the journal is the first step in the accounting process after the transaction occurs? And then what are the benefits of having the transactions recorded in chronological order? Make sure you answer these questions, finish those journal entries, and I'll see you in class tomorrow. Thanks.